All right. Good afternoon, traders. Thanks for joining today's guest speaker webinar. You can use the chat and Q&A boxes to ask questions throughout the webinar, and Rob will do his best to answer them by the end of the presentation. As always, my name is Keith here with Shark Indicators. We've been involved in the NinjaTrader ecosystem since 2011, providing tools like Bloodhound and Blackbird that help traders be more productive and in control of their own trade systems. We're always looking for ways to add to the trader's toolkit, and Shark Week is a big part of that mission. Before I pass it off, let's take a quick look at the risk disclosure. Futures, foreign currency, and options trading contain substantial risk and is not for every investor. And past performance is not necessarily indicative of future results. Rob is the president of Indicator Smart, providing services supporting traders. He's been the largest E-mini S&P trader in the world at various times and has won the prestigious Robbins World Cup E-mini Trading Championship. He has been a trading system developer for nearly 3 decades. He's a proven researcher, trading system developer, trading educator, presenter, and mentor, helping others to achieve their dreams as traders and in life. So with that, Rob, feel free to unmute your mic, share your screen. We can get started.
Okay, there we go. Okay. Hey guys, thanks for coming in today. Keith, thanks for the introduction. Today's webinar, Amazing Secrets of the World's Best Money Managers. When I say that, I'm not just talking about myself. I have hedge funds that I work with, and I get little cool things shared all the time. So we're going to be covering some of those things in today's webinar, and I'm pretty excited to be sharing that with you. Yeah, pretty excited to be sharing that with you. Let me see if I can. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Yeah, don't use the grocery money for trading. Yeah. So in this webinar, I'm going to cover a whole bunch of broad kind of concepts. These are broad strokes that the best traders I've ever seen use to be successful. Depending on where you are in your development or your journey as a trader, some of the things might make more sense and others a little less, and that's okay. Yeah. So the idea here for me today is to cover these broad strokes in hopes everybody will get a little something. We're going to cover a lot of different points that can make a difference in your trading. Yeah. In a sense, we're going to be talking about how one might think about trading and how we approach trading given how others are likely to be thinking. Yeah. How are the other traders thinking, and how does that unfold as a story? Might be another way of saying it. Yeah. So in this way, we're discussing the dynamics of understanding how markets move fundamentally. So then after that, I want to get into some more specific things like trading signals and how to create your own stats on what the market might be doing. Yeah. And we might even do I'm going to do some Bloodhound code. I'm going to show you a cool, just simple Bloodhound code, you know, in a unique way by applying what we call a zone system to an indicator specifically, and then using an indicator as a momentum indicator as a trend indicator in a non-standard and unique way. Yeah. And so we'll do that near the end of the webinar. Yeah. So stay tuned for that. Then I'm going to show you some amazing risk management tools in addition to other concepts that can help your trading. Expect this to be an information-packed webinar. If you've attended one of my webinars before, you know that it will be. And like I said, I usually do that with the intention of having everybody who's attending from kindergarten to PhD level find something that can be of value. Yeah. So, all right, let's get to it. Yeah. A few things to think about. What's more important in trading, signals or the context? You know, the context. Signals or the context? How does the context impact the validity of a signal? And how do trading signals impact the context? Yeah. Do they interact? You know, what's the difference between the context you can see on a chart and ones that you cannot? And do markets play by a script, or are they just random? You know, is it possible to be successful and be doing what other traders are not doing, or not being aware of what other traders are doing, for that matter. And what exactly is it that makes for successful trading? You know, what are the two most important questions a trader should really know in order to be successful, that I've seen over and over and over again in my career? You know, and how does timing impact your success? How to achieve it, and when is movement in the market more likely to happen or not? You know, all these things that we're covering here are part of a broad stroke kind of view, and we'll be looking at these things a little bit closer. Yeah. What's more important in trading, signals or context? That was the first one we had up there. Yes, signals, signals, signals. A large percentage of traders in their journey focus largely on trading signals. But is that the best course of action? Signals are cool, don't get me wrong. Yeah, and you should have them, because signals are best at what? Managing risk. At least from my viewpoint. You know, you might disagree, that's fine. Great signals are great. But very often signals are trying to do several things. They're trying to get you to a target, and they're trying to not get stopped out, and they're trying to enter in the right place at the right time. You know, in my experience, it's important to know the answer to a couple questions before you fire a trade. And if you always know these questions, it shifts the balance of your thinking towards outcomes. Yeah. In other words, it's a little bit future oriented. That's another way of thinking about it. And there's more than just knowing. So it's another subject unto itself. I'm not going to get into here for today's purposes. Always knowing the following two questions. And if you do, I predict your balance for success will take certain shifts that can put you on a better path in your trading. So based on 30 plus years of trading and 9 years of teaching daily in the trading room, we've come to these questions. Number one, what's the market trying to do? What's the market trying to do? And what's the most likely direction for range expansion? These things change throughout the day. Yeah. I asked the question earlier, does the market play by script? You bet. I can prove that statistically. We have a lot of metrics that we use and that we've developed over the years for getting just that, for helping to answer these questions. So I say, if you don't know these two things, you probably shouldn't be trading, unless you've got a signal that on its own merit is better than 90% accurate. Yeah. So the market may be trying to expand, or it may be consolidating. And if you can partially even answer one of those two questions, it can make a huge difference. Yeah. So knowing the answer to these questions can potentially reduce losers, and it can potentially increase winners. Yeah. If you're reducing losers and increasing winners at the same time, you get a double whammy. And if you're going in the wrong direction with that, it's also giving you a double whammy in the wrong direction towards the losers. Yeah. So that beckons another question. What's more important, the losers or the winners? Or controlling the losers or controlling the winners? Yeah. Because most traders have focused much of their time on signals, most traders have some reasonable semblance of trading signals, because that's where everybody puts their focus. Yeah, I know I certainly did for the first 25 years, probably 20 years of signals, 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 signals. Yeah, nothing wrong with that. But if you shift your consciousness and the way you're thinking about these things a little bit, it can open up some doors for you. Yeah, so you might have many different signals. If you know the two questions, though, what's the most likely direction for range expansion? What's the market trying to do? The signals become a lot easier. In fact, if you get really good at answering those two questions, you might not even need any signals at all. I don't recommend that. Yeah. So these things are in a continuum. They're in a balance. Yeah. And you need to get the right ratio between them. And when you get the right ratio between them, you start becoming very consistent in your trading. Yeah. So, So I had the honor of working early in my career as a developing trader with Murray Ruggiero, also known as the Einstein of Wall Street. And one time, Murray told me, because I had spent a lot of time with Murray on the phone, and just we became very good friends. And one time Murray told me, he goes, because I was talking about system and taking this signal and that signal and this and that and everything else. He goes, he goes, you know, Rob, if you just took 1% of what's there, it's way more than you could handle. Yeah. And so that just stopped me in my tracks. I thought about that for years after he said it. Yeah. If you can just get the 1%, yeah, that can be life-changing. Yeah. Just the one trade, the one right trade in the right place at the right time. And that's all you need. Yeah. And so this notion of just that one right thing is a big thing that we focus on when I'm teaching. You know, just the one thing. And for it might be different for you. Just like I started this webinar, I'm saying, okay, well, you know, one person might get one thing out of the webinar, somebody else might another, and I'll take these broad strokes. Yeah. But the same principle applies. The one thing. Yeah. But it applies in different ways in different contexts when it comes to trading. So it starts with knowing what the market's doing. Yeah. And generally speaking, we think of the market as an unfolding kind of narrative, and it plays by a script. And we make these things that are called market maps, and the market follows them, and it has surprisingly high statistics. You'd think you put these things together and it's just random, but it's not. And I'm going to show you an example right here. Take the open of the day. Yeah. The open of the day. What's the open? You take the for the E-mini S&P. That open in Chicago time, 8:30. Chicago time is the open for the E-mini S&P. On any given day, the market opens in or out of value on a profile chart. So you have that group of traders. Yeah, it opens in a certain part of the floor pivot range. There's a 30-minute trend possibly. Yeah, 30-minute periods going higher, 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 higher lows and higher highs, or lower highs and lower lows. Yeah, there may be a trend on day charts. Yeah, with day time frame players. There might be short-term trend players on in a more or less immediate trend. It may be extended over the open. Then you've got the Globex, you've got the day session, you've got the European session. Yeah. The market may have gone further than normal on the open. It may have gone less than normal. It may have exceeded any reasonable range to the point that at least statistically is like a 0% that it can expand the range. That was our second question. Yeah, number one, what's the most likely direction for range expansion? What's the market trying to do? Yeah. So each of these groups may have different intents. Yeah. On some days, they may all have the same intent. And on those days, you'll tend to get more of a vertical day. You know? So it's good to know what each of these groups is up to. And particularly so at a minimum, the 30-minute time frame. Yeah, because all the profile players are 30-minute players. So it's really good to kind of understand the market from the viewpoint of what they're doing. Yeah. So each of the things that we've covered so far has implications that makes each day unique. Yeah, because on any given day, all these things are going to combine in different ways. And so the methods that we're discussing here can help you to see what these groups are doing. And if you know about these groups, the way the market moves can tell you what it's trying to do. Yeah. I'll watch how 30-minute periods are, you know, for example, defending prior 30-minute periods, for example. So even if you get these things a little bit more than half right, it's a huge advantage. Yeah, huge advantage. So depending on the blend of these factors and what these groups are doing, you'll get different kinds of price action. And you'll also get different scales. If you've got an argument going on between a 30-minute scale and a day type scale, you're going to get, or time frames, if you will, you're going to get different scales on the chart. You're going to get big alternations. Yeah. And so if you know what these groups are, then when you look at the price action on the chart, you can kind of tell which groups are doing what. You know, so the issue of scales is no small thing. In fact, if anything screws traders up a lot, it's the scale changing. Yeah, scale changing. If you get small, consistent alternations that keep kind of pushing in one direction, that's very different from, you know, you run 40, 50 ticks and then turn around, go 40, 50 ticks the other way, all in one run. Yeah. Large scales, more often than not, tells you what we already discussed that or suggested it, that higher time frames are present. Yeah, 30-minute players or day players, that sort of thing. Floor pivot players. Yeah. Small consistent scales tell you the market is dominated by one or all time frames. Given that, you know, you could ask the question, well, when's it best to trade? Small consistent scales. Yeah. So super important concept here. Yeah. Even if you only look at the scale and understand how the market's scaling, can be a huge game changer for you in your trading. Yeah. What are each of the groups doing, each or as a whole? What's the market trying to do? Answering that question. Yeah. If they're in conflict, you get counter trend market. Yeah. So what will happen there, traders, is they might try to hop on a trend, but as soon as you, because the market's consolidating in scale, by the time the trend sets up, you're already at the edge and the counter trend players push it back the other way. Anybody who's been trading for any length of time knows what I'm talking about there. But if you understand what the groups are doing, you know that you would expect counter trend traders at the level where you're entering, and therefore you wouldn't enter. And you have a little bit more, you know, you reduce losers when you're doing that. Yeah. So if all the time frames are in agreement, you'll get trends. Yeah. And depending on the scale, you'll often get trends. You can get trends inside a larger scale. So we're talking, I'm actually painting a picture for 3 different kinds of days. You got trends where you get clean cycling all day long, 30-minute periods defended, etc. And then you'll get days where higher time frames are fading at larger scales, but you'll get clean trends inside the scales. Yeah. So that brings up another super important point, or another way of thinking about this. Who's on my side when I enter a trade? So I've heard traders for years talk like the market's like some kind of conspiracy against them. Yeah. Oh, they ran the stops. Oh, they did this, they did that. The word they, right? So the fact is, you cannot be successful trading unless some other party is interested in carrying your trade to success. If you enter the market, somebody has to enter after you and carry your trade to success. But if you understand what the different groups are doing, what's the most likely direction for range expansion, what's the market trying to do, etc. Yeah, then, and you're thinking in terms of somebody carrying your trade to success, and you want to make sure that you're getting in what before that group is interested in carrying you forward. Yeah, so they have to be willing to enter after you and in the same direction. So if you know the things that we're referring to here, this is what will tend to happen. You'll tend to get yourself aligned with it, and you'll tend not to get yourself on the wrong side of it. Yeah, because the market in and of itself is a herd mentality, and if your mentality is the herd, you got a problem because you're going to get lured in. And so what happens after a while, thinking the way that I'm describing here, you'll get caught on the wrong side less and less and less and less and less. Yeah. So timing's important, right? So we're getting narrower here, right? The timing. Now that's where we're to start talking about signal. Okay, I know what the different groups are doing. I got a good idea. I got a working hypothesis for what the game might be. I'm not at an edge. I don't have counter trend players, et cetera, et cetera. Okay, I'm looking for a signal going with that working hypothesis. Yeah. And the signal becomes much less critical under these circumstances. So if you're coming out of consolidation, there will be a point where one side or another has to throw in the towel. That's kind of a breakout, right? So this is where trends commence. and learning how this happens, you know, where does the one side, you know, you got an argument going on between 30-minute players and day players. At the point that the day was going to be more likely the 30-minute player is going to have to throw in the towel. Where do the 30-minute players have to throw in the towel? Yeah. And can I find a signal consistent with that as it's happening, or even before it happens, and let them carry me to success? Yeah. And you only need a couple of trades like that a day, maybe even only one, to do well. Yeah. So also knowing how the market reverses is important. We've developed whole technologies around this kind of stuff. Yeah. So if timeframes are not in conflict, knowing that's important. We've already covered that. Knowing any of these things in trading is not necessarily a concrete thing. Why? Because it's a probability. And thinking probabilistically is a skill set. It's not natural to think probabilistically. Yeah, you're thinking in terms of outcomes. You're expectant of an outcome. But to think I'm expecting that outcome at 58% is a very different animal than hoping that that outcome is going to occur and not having any idea as to what the probability of the outcome is. It's a very different kind of thinking, and it takes some time and effort to master thinking probabilistically. Yeah, it's even counterintuitive. Yeah, we're just not designed that way to think that way naturally. So it's a skill set that you have to develop over time. This being said, you cannot necessarily know what a market is doing just by looking at a chart. And this is a big one. Why? Because markets follow scripts. And I'm going to now turn this presentation towards that kind of a subject. Yeah. And I said before, I can prove it. And I think we're going to look at a couple of examples here of that, if I recall correctly. So for this reason, we've developed a technology called market mapping. Originally, actually, it was Murray that introduced me to a guy that was market mapping. He told me this guy's taking 4-minute charts. He prints out the transparencies on a laser printer, and he holds the transparencies up to his screen and tries to find a match. And then I said, could I talk to the guy? And he asked the guy, and the guy spent like a whole day with me teaching me how he was market mapping. And that was like almost 30 years ago, 26, 27 years ago. And I've been developing market mapping technology ever since. And I took it a lot into different areas than where Bob originally showed me how that works. So I'm going to show you an example or two in a couple minutes. Yeah. And we're going to look at how to predict consolidation or expansion also within that framework. So when the markets are following their own tendencies, that's another word for market mapping. Markets following what it normally does, they tend to move a little better. Yeah. So first we discuss all these different groups. You're like, oh, there's all different groups. There's 30-minute players, a 4-pivot players, a trend players, a day players, et cetera, et cetera. But when the market's following what it does during that interval of time or place, it tends to follow it more. And I could even, I can't prove it, but there's pretty good reason to believe that savvy traders are following these scripts, which means what? You would have them on your side. Yeah, and I'm going to show you in a minute what one of these scenarios can look like. So when they're not following it, when all these different time frames that we described are in conflict with one another, and it's not following, that's very dangerous. If it is following, it's a huge edge. Yeah. So if we only trade where the market's most predictable, yeah, we know what the time frames are doing. They seem to be playing it consistent with the map or, you know, with the tendency, then it stands to reason we'd be more able to make those 1% trades that Murray talked about, yeah, that we discussed earlier, right? So put another way, you cannot see all the things we've discussed just by looking at a chart. You need to have a higher level viewpoint, and a map can help you to do that. So what are some simple rules for knowing if you're likely to consolidate or not? And is the above that we've been discussing different from knowing when you're in a trend? And the answer to that is yes. So I'm going to show you some simple rules in a minute that can keep you out of trouble. Yeah. So given all that, not having losers, may be way more important than having winners. Yeah, a well-placed winner is way better than a mix of winners and losers for many reasons, not the least of which is how you feel when you trade. Yeah, how you feel when you trade. So the win percent becomes a big thing. Yeah. So for most traders, I think in terms of winning, not losing, and there's a big difference. Yeah. If you're thinking just in terms of winning and not losing, yeah, because there's 4 poles to that equation. Yeah, there's 4 poles in that equation. So for this reason, I suggest focusing on your win percent. And just saying that's a bit abstract, so I'm going to clarify a little bit. Yeah, not losing. Yeah. So let's get to some meat on this. So we've already alluded to the idea if a market exhibits different or abnormal scales in the probability for the market being directional declines. Now, this is just another way of saying it. What simple rule might reveal such a thing a good percentage of the time? Yeah. So one pattern that we do is called CD is greater than AB, or encompassing patterns or scale changes. I'm going to show you what those are. Let's take a look. Yeah. Okay. Up at the top left here, I have 3 things. CD is greater than AB, scale change, encompassing pattern. If you know what a measured move is, CD equals AB is a measured move. So there's no rocket science here. Yeah. So look at that first leg on the left-hand side with the dot dash yellow and the little kind of funny arrow pointing at it. Says long leg, scale change, CD is greater than AB. That leg right there that I've got the dot dash yellow going up on is longer than the one prior. Yeah. On the one prior, I got 3 continuation bars going up there. And on this one, I got what? 1, 2, 3, 4, 5, 6, 7. So I go from 3 to 7. When you get that, we call that CD is greater than AB. The second leg is longer than the first one. Like I said, no rocket science. It's also a scale change because nothing else on the chart is that big. Yeah. When I see that, my working hypothesis is that I may see some kind of consolidation. So I drew a circle or an ellipse around the consolidation. Consolidation can happen in different ways. This is on the ES just a couple days ago. I just grabbed this chart. Yeah, that up at the top there is what we call a 4-tick trap. You just get those continuation bars are 4 ticks. So that 4-tick comes out the top there, and then it reverses and comes back down inside. Why? Because you get counter trend traders or faders when you get the CD is greater than AB. It's a form of overbought, oversold. The CD is greater than AB, the scale change invites faders. Yeah. And so I said earlier also, it's good to know how reversals occur. Well, one of the ways reversals occurs is you get these little 4-tick trap patterns. Yeah. You see another one over on the right at the top, another 4-tick trap reversal pattern. Yeah. You got the long leg, and then you trap up at the top. And the counter trend traders step in after the long leg. Yeah. Okay, covering the other ones, a small encompassing pattern. So I did a 4-tick trap. This is in the middle, going down, small encompassing pattern, it says, right? You got the 4-tick trap, and then it encompassed the prior structure. I drew 2 yellow horizontal lines, and anytime you go through both sides of a prior structure in one run, we call that an encompassing pattern. And it is not uncommon to get a 4-tick trap and an encompassing pattern as a reversal sequence, And then it hooks again, it comes back up, and then it comes back down. You get the CDs greater than AB, and then you get some consolidation. I drew a circle around that. That one's kind of in the middle there, right? Yeah. And you come down, and you come back up again, and then you get 2 reversal bars going higher, and you get the CD is greater than AB. You get the long leg and a scale change. Yeah. Not a dissimilar pattern to what had happened earlier. It's almost like it's repeating its pattern from earlier. Yeah. It's not exactly the same, but it's very, very similar, right? And then you come up, you form the 4-tick trap again, you get the encompassing pattern. Same darn thing. The scales are different, however. Yeah, scales are different. And then you get the long leg, you get the consolidation. Yeah, or it looks like consolidation to start, and then you get the breakout. What's the breakout we talked about earlier, where all the parties, or at least one of the parties, is getting stopped out. You know, and you happen to be breaking out of the entire earlier range at that level as well. Yeah. So, yeah. So there's 3 of them. Again, CD is greater than AB, scale change, encompassing pattern. Let's read what I had here. CD is greater than AB. The second leg is longer than the first. Encompassing pattern, one run covers or encompasses the entire previous one. And scale changes, there's nothing that size anywhere else on the chart. Yeah. No. With each of these, we are asking who or which group of traders is dominating this action. And this helps us to know what they, quote unquote, are trying to do. We're not always right, but you only need to be partially right to be successful doing this. In this way, the market becomes an ongoing developing story that's being told, and the most successful trading happens when the stories make sense and you align yourself with the unfolding narrative. Yeah. Okay, so this one chart has a lot of information on it. We just covered a lot of information in a short period of time. Like I said in the beginning of the webinar, you might get some stuff and not others, or you can come back and watch a recording and catch this later. Yeah, that's okay. What's important about that, is that you're able to kind of get a handle on this unfolding narrative. But there's another thing that's important about this. I have found, training thousands of traders, if you learn just one thing and make sure you learn it independently, it makes a huge difference. So like I'm showing you all these like broad stroke things in this webinar, right? I'm suggesting one thing, and you learn it independently. You make sure that you hold it in your mind independently so it doesn't get mixed up with other concepts in your head. And then if you take that and you just do that one concept and you study it and make it your own and don't mix it with the other ideas, if you approach learning this way, you'll move to a second concept only after you get the first ones. If you do that, your learning potential will expand geometrically. And if you don't, the learning curve can take much longer because nobody understands the mumbo jumbo of 5 different concepts working their way out in your head all at the same time. This is my advice. Which one thing should I choose, Rob? The one that you see. Choose the one that you see. And just like I said for the webinar, maybe you see this or that, other people getting different things out of it, and you choose the one thing that you see. Let me see if when the market exhibits these 3 things, you may well do to expect some consolidation. So we're jumping back to the original subject here. CD is greater than AB, scale change, encompassing pattern. When you see those 3 things, at least start expecting some kind of consolidation. It won't always happen. Depends on the situation. So one rule of thumb is you go CD is greater than AB, then expect 2 legs inside the prior structure. 2 legs inside. That's one rule of thumb for that. What's the problem with if you get 2 legs, you go A, B, C inside the prior extension? What's the problem with that? Well, it's an invitation to another time frame to go counter to the original direction. In other words, you no longer have all time frames on your side. So you want to be on the right side. Then it's my advice to stay away from these structures until you study them and you know them. CD is greater than AB, encompassing pattern, scale change, etc. Study them until you know how they behave. And the example we just showed was in the ES, and you'll see this similarly in just about any market. It won't always happen as 2 legs, but it's a good starting point for learning. So by observing for your own purposes, what markets do after these patterns, Yeah, that's where a good starting point. Interpret it with respect to what the market's trying to do, and then try some mapping. So we're going to get into some mapping here. Now, mapping is where the market does a certain pattern most of the time that you can't generally see just by looking at a chart. So what's the one of the simplest forms of market mapping is mapping the range. I'm going to show you how to do that. What percentage of the time does the market go $1? Yeah, $1 off of the open. Yeah. So this is a crude oil chart. Just happens to be what I had up the other day. I didn't clean it up or anything. It's just what it is. Yeah. So what did I do here? See that ruler up at the top there, the box? It tells me I got 67 bars on the chart. Yeah. It says number of bars, 67. That's all I did with it. I was just getting how many bars do I have on this chart? Yeah. And then I've got a line there at $1. I'm trying to answer the question, what's the probability the market's going to go $1? $1. Yeah. And so what I do is I'm lazy, so I just count the ones that don't touch the white line. 1, 2, 3, 4, 5, 6. Yeah. There's some holidays in there too. That's okay. It's not rocket science. Yeah. Okay. 6 out of 67 bars didn't make $1. Some of them were holidays, but I'm going to ignore that and make my stat worse than it would be. Yeah. Yeah. Okay. So consistent with everything we've discussed, there's 67 days on the chart, including the holidays. 6 of them didn't go $1. Yeah. That's roughly about 90% plus or minus. No rocket science. Yeah. It's a simple market mapping. Can you tell this just by looking at a chart? No, you can't. Why? Because I'm looking at days. Yeah. Yeah. And this is a form of market mapping. So if I'm trading in the markets, so how can you use something like this? Okay, if I'm trading and the market's gone 60 ticks, what's a question I could ask myself? Because I'm always asking myself 2 questions. Yeah. What's the market trying to do, and what's most likely direction for range expansion? I'm at 60 ticks. Yeah. I know it's 90% to go $1. Yeah. What's the chances the market goes $1? About 90%, right? So is the market exhibiting behavior consistent with it trying to expand the existing range? Well, if it is, then there's 90% chances going to whatever that level is, $1. So this is just one example. So I got a working hypothesis for that 90% eventuality. You know, my time frames are doing this, and kind of throw some of that in there if I want to, but we're just keeping this simple. Find my favorite signal, manage my risk. You know. So we don't just, so like for my trading and for like the trading room, well, we don't just use one stat like this. We actually have hundreds of these, not that we use them all, but we actually do have hundreds of them. Yeah. We use the ones you see. Yeah. Or you use the ones you see. Yeah. Use the ones you know. Use the ones that you've seen over and over again happen. And in other words, the ones that you've come to trust. Yeah. And like I said, it takes a little time. Yeah. That's okay. Give yourself the breathing room to get there. So I'm going to show you another kind of market map, like one that we use in the trading room, that might be a little bit more like rocket science than the one we just did. But this one I just showed you is awesome. Yeah, it's a little harder. I will let you know, it's a little bit harder to predict consistent ranges in the ES because it plays that a little bit differently. Yeah, the ES can go on a tear, or it can get quiet for days at a time. Yeah. In that case, we use something called relative range. Yeah, but that's a little bit beyond our scope here. So I'm going to use crude oil for today because I was trading that live. So I got a map here. Yeah, let's see if I can remember this. A period was 63 ticks. I used the ruler. See that down at the bottom, Y value 63. AB period was 78 ticks, and ABC period was 120 ticks. Those are the 30-minute periods mapped onto the regular bars. Those boxes are the 30-minute periods. And up at the top right, I have our super map, is what we call it. I was expecting 56 in the first range for A period. So it was a little bit bigger than expected. It actually went 63. For the 2 periods, A, B, I expect 88. We got 78. So we're 10 ticks shy on that. And by C period, I expected 114. We actually went 120. So at the end of C period, we were a little bit ahead of where we should be. But then what I have is, what's the probability of expanding the range in D period? It's only 50%. You can see for the other periods down on the very bottom row, B period, well, A period was 100% to expand, B period was 80% to expand, C period was 80% to expand, and then D period was only 50% to expand. So 2 things happened there. Number 1, we exceeded our range that we expected, and number 2, the next period was not expected to expand the range. This is market mapping at its finest. Yeah. So at D period, the market became random to expand. And when D period failed to meet its expected range, what was D period's expected range? It was 53. It didn't make anywhere near that. It only made 30 ticks. It was, if you look up at D at the top, range 1 is 53. It only made 30. When a market exceeds its range and it comes down and it doesn't meet the range that's expected, and it was going down like that, that's bullish. Why? Because the sellers are getting absorbed by the buyers that are down there. Yeah, at least that's your working hypothesis. What was the probability for E period to expand? 30%. Wow. And what was the probability for F period to expand? Only 20%. Yeah. What did the market do after this? Well, it went up. It at least went up into F period or so, as I recall. Yeah. So this is a form of market mapping that we do on an ongoing basis. You know, in the room. This is an example of it. No rocket science here, and this is just one way that you could do it. We've got all kinds of other predictions that we could make on these things. I could discuss other things here, but this is good enough example for our purposes. So you can see from the map, there's other all kinds of other computations on there. This is just one simple example. So in the spirit of keeping it simple, we'll leave it at this. Yeah, so the one I showed you earlier that you can do on your own, the range, yeah, you can also do that in other ways. Like, for example, you could use NinjaTrader chart templates to make custom templates covering specific intervals. Yeah, you could have a field day with that. And the stuff will work. Yeah, I'm telling you, it'll work. Yeah, and so you can make predictions all day long. Yeah. Of course, we've already done a lot of that work for you, and the information's in these maps. Yeah, so I actually publish these maps on Monday morning for the whole week. Yeah, so you actually have, like, you know, today's Thursday. I should publish that map on Monday morning. So it's pretty awesome. Yeah. You could do some others on your own, like range by, you could do like day of the week. Yeah, I could say only Tuesdays, or you could do the Globex. You could see on those mapping tables, we had Globex predictions in there, you know, European prediction, European session predictions. You can make a session of any interval that you wanted to, but it should probably apply to something where groups of traders are involved. Yeah, so we call it a European session. Is there a European session? No, but Europe opens at a certain time, closes at a certain time. Yeah, only limited by your imagination. You can have a field day market mapping. I've been doing this for close to 30 years, and I'm showing you how you can get started doing that. If you want to learn more, of course, you know, we got resources. So you can combine these concepts with the other things we've been discussing. Yeah. Systems, strategies, predictions, what are the different groups of traders doing, and all this combined to make super trading system. But Rob, I'll be overwhelmed. Well, actually, the mapping, I only take, like, at the end of each period, like 3 minutes before the end of each 30-minute period, I do my mapping for the next period. It only takes a minute. Yeah. We've been doing this for coming up on 9 years in the trading room. We've really developed a lot of this kind of technology. It's pretty cool. Yeah. Originally, we had one called a 3-period probability walk. And these days we use something called the Ultra Map. I'm going to show you a quick example of this. See that Ultra Map there? See how up at the top left, Yeah, X. So from D period, you go 80% and then 90%. What that's saying is that E breaks D, and then F period goes in the same direction at 90%. And then the next one, you got the X at H, and then it goes 100%, I breaks H, and then the next one is 88% or close to 90%. This one's the ES, yeah. And then K period, this is K period, L period breaks K period at close to 90%, and then M period follows through at close to 90%, yeah. So what I did was I took the yellow lines and I drew them there, DEF, that's the first one, 90%. Yeah, it was a 90% to walk. And then HIJ, yeah, was 88% to walk. You see that towards the middle right? Yeah. And then KLM, 88% to walk. Yeah. What's a walk? It's where the M period is the extreme to the other two. Yeah. It's where I period is the extreme to the other two. It's where F period is the extreme to the other two. What are the ranges I expect there? I used a ruler, put the ranges on there. For the period ending F, for the 3 periods ending F, I expected about 12 handles of movement. I got 1775. For the interval ending J, I expected 11.22. I actually got 19. And for the period ending M, I expected 16.4, and I think I got 18.5 there. So I'm going to do multiple levels of projection, just glancing, like I said, every 30 minutes or so at these tables. Yeah. So these are just a few examples of mapping that I've developed over the years and that we do. Yeah. Why we don't just code these into an indicator. Yeah. Well, remember we got the different groups of traders and all these different things. So we don't just like plot these things on the chart because we want to understand them with respect to the other things. And if I did that as an indicator, I saw one company tried to do this and they got 453 different shades of color all over the chart. Yeah. We want to keep our charts looking clean and use them for the right purposes. Yeah. So each day is different. Each trade is different. In fact, a trade is like a fingerprint. That first chart that we looked at, remember you had the CD is greater than AB, and then you had the like 4-tick trap up at the top there twice in a row, and they were following basically the same script, but both of them were different. Yeah. So each trade setup is like a fingerprint, but the broad strokes they tend to play out. You know. And that's what we're also doing with the mapping. We're not trying to tighten our criteria around it. We're actually trying to keep it loose. Yeah. So this one thing that my biggest discoveries is instead of trying to tighten criteria when I'm making a trading system, I'm actually trying to loosen them instead. How far can I loosen my criteria and the statistic still works? Is another way of putting it. Yeah. Yeah. So trades are kind of like people. And that's why, I'll describe these things as an unfolding story or that kind of thing. So you try and give it some breathing room, just like you do with your friends. Yeah. So, and this concept is actually a guiding principle in everything we do in our trading. Yeah. It's a working philosophy of letting it breathe, not trying to get too specific, and preventing the fluctuation from expressing itself. So, okay, so we've covered a lot in this webinar, and I promised to teach you some about signals, and then we'll see if we can get to, some questions. I saw there's a few questions here, so we'll get to those in a minute. In the spirit of letting things breathe and not making things too complicated, this is a simple method that I use every day in my trading. I use Bloodhound for this. Yeah. You don't have to use Bloodhound for it, but it sure makes it a lot easier in terms of like how much mental energy you're putting towards it, which is a whole nother subject. Yeah. But so what this is, and I had mentioned it earlier, it's a zone system. What's a zone system? It's where zone systems are like a market profile or like floor pivots. Yeah. In this case, what I'm going to do is I'm going to break the Smart Momentum out. Smart Momentum is a tool that we use in our trading room. And I'm going to break that out into different zones. Yeah. I'll show you in a minute. Yeah. So we have a saying, the smart momentum knows. Yeah. So the market tends to go with it. It's actually predictive. Yeah. And so I like using the smart momentum for trend related metrics. Well, usually you don't use a momentum tool as a trend indicator, right? Yeah. So you can actually use the smart momentum as a standalone trading system. I personally don't do that. I use a trap trader oscillator as another tool that we use to help me. That's the order flow side of the equation. Yeah. So I'll use some other things in mapping and etc. Yeah. So I'm going to show you my how to do this on the ES. Yeah. And then I'm going to show you the Bloodhound code. Yeah. So let's take a look here. Let's get the rules first. Okay. I'm going to use a threshold node in, wait a minute, the rules are here. Okay, so I'm going to trade the green or red stripes that are going with the ABC structures. The market goes up, comes down, and starts to go up again. Not CD is greater than AB, not encompassing pattern or scale changes. That's all what we've discussed in this webinar. And it's not inside and you're not at the edge. So you trade, put in simple terms, you trade with the last most recent structure where there's room to grow to any edge. That prevents you from getting caught up with counter trend players that may or may not be present until you have studied that. Yeah. So I don't expect you to know the nuances of this necessarily. Yeah. But we teach this kind of stuff in the trading room. Yeah. And I'm going to show you the results of this with trade markers. So this is the chart. Yeah, this one's the ES. Yeah, and so you see that momentum down at the bottom. Sorry, I didn't get a label on there. There's a momentum down at the bottom. See how that I've drawn those lines on there? See how that momentum turns green on Bloodhound on the background? That means the momentum has gone through that orange line going higher. And so I'm looking for long trades following that. And as long as that momentum's staying above there, I'm still looking for long trades. Yeah. I'm using the momentum as a trend indicator. I didn't take other things off this chart. This is just my trading chart. And then I've got the buy markers there from trade markers. Does that automatically put that on the screen? No, I put that there. That's the trade. Yeah, that's the trade. What's the trade? Taking the hook after the background turned green. Yeah, after the background turned green. And then the next one, and then the momentum goes out the bottom orange line, and I start looking for shorts. And then it comes up and it starts going out the green line up above there. Yeah, I could have made a long there in the middle of the chart. I could have, but I waited for another leg. I waited for the third one. Yeah, I waited for the third reversal bar. Yeah. Now, this is the system, just super simple. What am I doing here? It's just the momentum alone. Yeah, the momentum alone. And so I ran this in trade markers. I'm going to show you some really cool stuff right here, guys. Excess orange is what I call it. When it goes out the orange line going higher, I'm looking for long trades. When it goes out the orange line going lower, I'm looking for short trades. I'm not trading at the patterns that we discussed. Yeah, CD is greater than AB, encompassing pattern, etc. I got a 16 tick stop loss, 4, 8, and 16 tick targets. Yeah, I don't have a break-even stop on this one. And this is the result in trade markers. Trade markers is really cool. You can do a lot of stuff with this, but I can get complete statistics on my method here. I'm not going to get into the details of it. Yeah. But for the first target, it's 100%, this 4-tick target. The second target, 8 ticks, 87, and then 67%. And that tells me how much my edge is and all the other things. It takes out the commission and everything else. Yeah. This is a module inside of trade markers that if you like to do prop firm kind of stuff, you can actually input the criteria for your evaluation on the left-hand side, you've even got templates in there. I just chose this one, 7-day, yeah, trailing stop, 100, drawdown 1500, total profit 1500. And it will show me whether or not I would be successful with those prop firm criteria given my trading strategy. Yeah. Yeah. So it made the profit goal. You can see the drawdown on the donut. Yeah. And you can see the portion of it of what was allowed for the drawdown. And then we got 4 days needed because this is I only did this test for 3 days. Yeah. And I needed 7 for this. I could have lowered the days traded to 3, in which case it would have shown that all green, etc. Yeah. But if you do pay for combines or whatever, you can save yourself a ton of trouble. Testing before you trade. That's what we call testing before you trade. Yeah. Testing before you trade. And trade the way you test. On this particular panel, this is called import markers. I can actually import my stripes from Bloodhound for the entries and the exits. Very cool, very powerful. Yeah. And so you can get your Bloodhound code into a platform in which you can tell how it would do with a combine, or you can tell how it would do given, you can get into very accurate analysis. You can go in and look at the individual losers and the trades and everything else. Very powerful. On the load file tab, I can actually share this. Yeah. I can actually load one from another person, like a member could send me this kind of thing. I do analysis on it and everything else. Yeah, very, very powerful stuff. Yeah. Okay, here's the Bloodhound code. Yeah, please don't ask me for this code. It's like so simple, it's ridiculous. It's a threshold node with the smart momentum fed into it. Yeah, you can see the smart momentum. It says indicate on the inputs, indicator smart momentum. And the thresholds are right there. I used 1.05 and minus 1.05. That's it. That's the whole code. You see I got a toggle on there. I could have put the toggle on there. I would have made the background stay the same color until it changed. I could have put the toggle on there, but I didn't. Yeah. And that's my code. Now, I've been developing trading systems for like 1990, 1991 was when I started back in there. Yeah. The best trading systems I ever developed are simple. It can't get much simpler than this, but it starts with an indicator that's predictive. Yeah. So if your indicator is not predictive, you might have a lot of lines of code. Now with something like this is pretty simple. So, okay, I've shown you some actionable methods today for your trading that I've been using and other members been using for years. We discussed different ways about trading that can make a difference for you. We've looked at a simple triggering system. We've looked at ways of understanding the market structurally based on fundamental ways markets work. And if this makes sense to you or connected with some of these ideas and would like to expand that, consider join us. Yeah. You can learn more at Indicator Smart and or on indicatorsmart.com trading room pages. So I'm going to give you some links here, guys. Yeah. You can also go to Indicator Smart and you can get a free heat map indicator. Yeah, opt in there. Yeah, and get the free heat map indicator. Now, I have another webinar article that I'm going to be released in the next few days. So if you opt in, you're going to get that. And that is like adjunct material to what we've covered here today. Yeah, so if you vibed with anything here today, I would strongly recommend that you opt in at Indicator Smart, get your free indicator, and get on the list so that you'll be notified of the other webinar article. Yeah. In addition to other resources like the YouTube channel and everything else. So we're going to be doing a webinar soon on trade markers. I just showed you some peek previews of some of the features in trade markers. And so you'll also be notified of that. Yeah. If you're trying to get funded, like I said, you test before you pay, not after. Yeah, that can save you a fortune. Yeah, as I'm sure you're aware if you've been doing that. So, highly recommended in addition to other risk management and trading tool resources that we've shown today. The chart we used earlier is a chart from the Smart Patterns trading system, trading room pack from Indicator Smart. That's by far #1 best-selling package. There's various other packages there and options for taking advantage of this. Look at indicatorsmart.com for details and options. If you are wanting to get some components or non-sale items and are attending this webinar, take advantage of it before next Thursday, the close of trading. That's about a week out, right? We rarely offer discounts beyond the special package and bulk order discounts, so take advantage of that. I'm going to give you a link that will get you those resources in just a second. Okay, I'm not a sales organization. I mean, we have a website and everything else, but that's not our first priority. We're a trading and research firm, and we offer some trading tools that we've developed over the years to traders who are interested in learning, yeah, from somebody who's experienced, yeah. As a result, we do these webinars for informational resources for you as a community service, and because we're asked to do them. Yeah, sometimes we do webinars where we're not asked to do them, but those are usually also informational. Yeah, and so I would like to thank Keith and everybody at Shark, Jeremy and Zach, everybody, for having us today. Yeah. If you like what we offer, think about it, joining us and learning more methods like this. In the beginning, nobody taught me anything. It really took me decades to get good. Yeah. And if it wasn't for the fact I'm entirely probably insane, I wouldn't be here today. Yeah. So, but you learn a lot faster if you have some good resources. Yeah. And if you apply it earnestly with realistic goals in our experience, yeah, that can be part of it. Go to indicatorsmart.com/shark, and all the resources are there. Now let me see what we got for the questions. Now, hey Keith, I'm not seeing any open questions, but then on the chat,
yeah, it doesn't look like anyone used the Q&A box quite yet. If you have any questions for Rob, throw them in there.
Yeah, I thought we had 9 of them there. Let me just scan through this. Yeah, nice to see some familiar faces.
Yeah, it seems like everybody in chat is saying how much they like listening to you.
I love you too, man. Okay, looks like you got that, Keith. Crypto. Okay, so Bruce, let me tell you about crypto for a second. It will work on Bitcoin futures. Now, that momentum indicator that I just showed you, you could totally, yeah. But if you, so here's the problem with some of that data is that they don't have bid-ask data. Not that you need bid-ask data, but you need good order flow data and volume data. Yeah, and so, but if you're doing Bitcoin futures, for example, yeah, no problem. Yeah, no problem. That will totally work for that. The problem is like with the FX, for example, they're notorious for changing the data. Then they certainly change their volume and order flow data after the fact. Yeah. In fact, they may even change your data feed according to the way you're trading. So be careful with those guys. That's why I prefer the futures markets, because the futures markets are showing you what's there. It doesn't get changed after the fact. And if you're trading like currencies and stuff like that, I'd much rather see you doing it in the futures side. Yeah. But these technologies that I'm talking about work on any reasonably volatile market. Yeah. So, All right, guys. Well, if there aren't any other questions, go over to indicatorsmart.com shark. Like I said, you can get a free heat map indicator over there. You can be notified of events and other resources. There's a coupon code there that is good for a week or so. And that's what I got for you today. Yeah. Thanks for coming in and joining us. And thanks again very much to Shark Indicators for putting on the event and taking the time and effort to do this. There's a lot behind putting on an event like this. And so thank you on that. Yeah. Thanks again for having me. And we'll see y'all on the next one.
All right. Thank you so much, Rob. Yes, it has been quite a lot of work putting this on, so I appreciate the acknowledgement.
Yeah, no, believe me, bro. I know. Yeah. So okay.
It's totally worth it. Yeah, it's nice to get, because like I've said before, we are tool builders and we're so focused on that one mission that it does create that one little blind spot where we're not trade coaches. And so it's nice to once a year bring along all these people who know more, especially compared to me, about the ins and outs of how you should or could go about actually using these tools really effectively. So it's awesome to sort of expose you to these folks and see if anything sticks, you know. So speaking of seeing if anything sticks, we are looking for feedback. I mentioned this yesterday. We want to know what your thoughts are. As for a few different vendors during this event have talked about the Shark Week sale. Now, all of the vendors are able to sell our stuff at our sale price. So don't feel obligated to buy from us just because it's on sale. If you've loved what one of the vendors has to offer and they're bundling with our stuff or, you know, offering a good deal, great, get it from them. But if you're ready to just, hey, you know, I want to use Bloodhound for signals, use Blackbird to actually automate my trades, use them together to do the full thing. The most popular one this week or this month, actually, it's been going through all of August, is this guy right here. So it's normally $2,000. It's on sale for $500 off for Bloodhound and Blackbird. So if you want to learn more, go to our website and just watch the video on the Bloodhound page. Does a pretty good job of explaining the purpose of these tools if you haven't already gathered that. So anyway, I'll let you enjoy your, I guess, probably lunchtime for you. At least it is for me. Come on back at 4 p.m. and let's close this out. Thanks, guys. Have a great day.